Yeah, and another thing too is like, you know, we can't decide, and I wish we could, but we can't decide. Hold on, put this. Oh, never mind. Ignore this. Hold on a second. Here, copy. Okay. And then, give me a second. I just put the link in there if you want to watch the stream. This is me mostly talking, but there's one or two things I did want to look at. Try to post it everywhere I can. And then let me make sure that you can hear us both. And I don't know, let's just hope you are. But either way, so I know, because I was trying to make sure like they could hear you too, but I don't know if they can, so we're just gonna have to live with it until I get this shit figured out. But the thing with stop losses, okay, that is essential to understand is that we can't set them for you. I wish I could, but I can tolerate more risk than you can. Or maybe I can tolerate much less risk than you can. Either way, we are not the same. So, for example, something I've seen with Lee and myself, we're willing to sit there and just deal with the fact that we're down 20% on a play. If I have to hold it for 2 months, that sucks, but I have to hold it for 2 months. Say it's a play I really believe in, and I'm willing to wait the 2 months. Maybe you're not. So my stop would be irrelevant to you because you're not willing to wait 2 months. Or say it ties up too much of your capital to be able to wait 2 months. We can't decide that for you. And another thing too is when you think about it, if you're following the allocation methods, okay, and you are setting your stop, say for example, you're setting your stop at, you're play 5% of your total portfolio. Okay, so say you're working with $1,000. Okay, so what would that be like? I can't even think. Fuck. Say you're in 10% of your portfolio with $1,000 portfolio value. Okay, that's $100 per play. And your stop loss is negative 5%. You lose $5 on that play. Which is, I can't even do the math right now. I don't know what percentage of 1,000 that is, but I think it's 0.02. Or it'd be 0.2%, I think. So, losing 0.2%, what is that? What does that matter? It's almost nothing, right? When you think about it, if you're allocating properly, so you're not putting more than 5-10% of your portfolio in any one play, losing 5% of that 5 or 10% of your portfolio is not going to kill you. I mean, obviously we don't want any losses, but it's not going to beat you down. So why not do that? And the reason that a lot of people don't like setting stops is they didn't know about it, which that may be true. But a reason I haven't liked setting stops in the future is because I become emotionally tied to the play and I just want it to work. I don't want to lose out on the gains that could happen in 6 months from now, a year from now, or maybe I think it's going to happen in a week. Either way, greed ends up being the thing that keeps me in the play, and greed ends up being the thing that makes me not set a stop, and then greed ends up being the thing that gives any sense of profits away. And at the same time, it's giving away my capital, which gives me less power to trade, which gives me less ability to make money doing this. If you stop out, you move on to the next play. And if you think about it, so I was doing some math last night. Say we're following the asset allocation rules. So say just go on the high side. Let's call it 10% of our total portfolios in one play, right? And let's say we're working with $100 total. So we got $10 in this play. We lose 5% of that. Okay? That's it. All we lose is 5%. So we lose, what, 5 cents? Or 50 cents? Jesus, I can't do math. Yeah, that'd be 20 times 50 is $10. Yeah. So we lose 50 cents of our $10, right? And let's say we take another play, we stop out. We lose another 50 cents. So we're down $1 now, 1% of our total portfolio. Okay? But then the third play we take runs 15%. We're now up $5. So we canceled out both those losses, and we're up 5%. Or even in a more likely scenario, excuse me, I stop out of one play at 5%, okay? I lose my 50 cents. And this is on a 10, say I'm putting $10 in this stock, okay? I've got 100 total, and I'm putting 10 into one stock. And I lose that 5%. Stop lost out. Shit, I stopped out. I lose my 50 cents. I take another play, and I don't stop out. It starts coming up. Say the play goes up, and I'm up 5%. So I set my stop at 2% gain. So if it comes down 3%, I'm going to stop out, but I won't lose anything. I will only gain. And then the third play runs 10%, and I sell it. That's 13% gain, right? Minus the 5% stop loss. So we're up 8% total. Losing on one play is irrelevant. All that matters at the end of the day is, are you net positive? So is your total gain greater than your total loss? So for example, when I calculated the total gains from every play we took in July, so every swing trade that Lee and I alerted, we combined them, and then we took the average, right? So I think it was something like 580% total gain, and then it was like something like 300 and something percent total loss. So the gain subtracted, take the gains and you subtract the loss. It left us with 140% plus. After I did it at the end of the month, it ended up being closer to 200, but 140 was the one I did the math for. That's why I choose to use that number. But think about that. So we were up a total net positive gain of 140%. So that means if you put $1 in every single play, you'd have been up 140% total, right? Maybe that's not feasible, $1 in every play, and I get that. But my point is that when we get attached to these plays, we feel this need for them to move. And if say we've been in them for 2 weeks, we're at a point where we're starting to resent the play, and at that point, it's almost like, oh my God, I've spent too much time in this play to give up now. And there's a fine line between exercising patience and giving away my gains, or taking too much risk, right? And that's a difficult determination to make. But one thing I do know is that when we cut our risk short, we give ourselves more opportunity to find gains that make more sense, right? Because if a play's not moving the direction we want, there is nothing we can do to make it start moving the way we want. There's nothing we can do. So go ahead. I mean, if we had like $6 billion, I'm sure we could do something, but we don't, so it is what it is, And the thing is that, it's like, I talk about this shit a lot, and some people are like, oh, it's cool and that's helpful. And some people are just like, fuck you, guy. But acceptance, okay? All it really means is that, okay, I'm acknowledging what is happening in front of me. So let's try to apply that to a play that keeps on tanking, right? You guys can see my screen. So let's just hypothetically, for example, let's imagine each of these red candles, for those of you that can see the stream, each of these red candles here is one. Just imagine it's one day, one trading day. It's not, but let's just imagine, okay? So I take this play right here. It runs up a little bit, and I'm in a positive spot. So I'm up above my entry. I'm like, all right, cool. I'm gonna swing this. I'm gonna hold it. Then the next day, bloop, I'm now down 10%, right? And it's like, oh shit, I'll just average down. I'm sure it'll come back up. Then the next day, boom, I'm down more. It's like, oh my God, I just put more money in. Now I'm down more money. When you increase your position size, any loss means you're going to actually lose more money now, right? And so let's say we put in more. Oh, we found the bottom here, definitely. This is going to be a good idea. until the next day. Boom, down even more. This has got to be bottom. This has to be the bottom. This absolutely has to be the bottom. I'm going to put more money in. By this point, you have 50% of your total portfolio in this play. And looking at this chart, it looks pretty damn abysmal right now. And so say you put in your last 50%. Oh shit, which don't ever do that. But I would say I put my whole portfolio in this play. Then the next day happens. And I'm like, oh yes, it's running up a little bit. Okay, I'm going to put more money in. You put everything you have in this play. And then boom. Now, not only is all your money tied up in one play, not only have you consistently given more of that. Hold on. Sorry, I had to sneeze. Not only have you given the market more of your money, then you gave the market more of your money, then you gave the market more of your money, then you gave the market more, and then you gave the market all your money. Let's think about the logic of continuing to add when we don't know where the bottom is, right? Because we thought this was bottom. It wasn't. Then we thought this was bottom. It wasn't. And then we thought this was bottom. And it wasn't. Why would I continue to add when everything is telling me that this is going to continue going down? Why wouldn't I wait until I see a reversal and some stabilization? Which this isn't really, but let's hypothetically. So why would I do that? I'm tying up all my money. So when I add more money in here, I can't take any other plays. So that means that every dollar I have is sunk into a play that's not even done dropping yet. So why do we do this? Why do we do that? Why do we add when we don't know where the bottom is? A lot of you have seen, I'll put in 10%, sometimes less. Wanna know why I do that? A lot of times, to be honest with you, it's just to keep it on my portfolio watch list, right? It's just so I don't forget to look at it. And then I usually don't add anything until I see this, until I see some sign of a reversal, and then I'll maybe do 10% more. But at that point, I'm only in 20% total of what I was going to put in. So if I was going to put $100 on this play, total, I only have 20 in there. So if I take a loss on that 20 bucks, it's going to be pennies compared to if I had the whole 100 in, right? My ego tells me I have to stay in this play because I've already been in it. And that's what I personally call the gambler's paradox. That Barron's article, that was kind of, I think that's how I ended up getting to do that interview for Barron's Financial, is like he liked that. It's simple and it goes like this. So say you walk into a casino, right? And you're like, I'm going to wager $100 and I'm going to sit here at this table and I'm going to play. So you're playing for a little while and you're up $50. You're like, shit, that was easy. I was up quick. So you go big on a big hand. You take more risk because you're up. You're starting to feel confident. The endorphins are flowing. You feel that positive energy inside you. You feel confident, maybe even a little cocky. And you think luck is on your side. That Lady Luck has come with you today. So you make a big bet, right? And then the house beats you down. You lose $100. So now you're at 50 out of the 100 you came with. Shit. I got to do something to work this money back. So now you decide you're going to play safer, right? Now that you've gotten beaten down, so you reach your hand in the cookie jar and your hand got slapped. So you're going to play it safe now. And you do, and you play it safe, and guess what? You work your way back up to your original $100. You're now break even. It costs you time and effort of sitting at the table, but as far as your money goes, you're break even. But then you're like, you know what? I was able to work my way back up from $50. There's no reason I couldn't start working my way up to a profit now. And so you do. And once again, you're up to $150. So you're up 50. At which point, again, here it comes. I think I'm feeling a little bit luckier. You know what? I'm up $50. I'm willing to lose it. I've already worked my way back up. I'm sure I could do it again. So I'm going to make a bigger bet. And then I'm down. Again, shit, I lost. This time I'm down to $25. But you know what? I worked it back the first time. I'm going to do it again. And then you do, and you're break even. And then you're up. and you don't leave the table. Why is that? So I didn't leave the table when I was even. I didn't leave the table when I was up, and then I didn't leave the table when I was down. Why is that? It's just a constant delusion that we tell ourselves that this is going to work. It's the refusal to live in the acceptance that either I'm up and I should walk away and lock in these profits and take what I can and get out of here, or I'm down a little bit. Rather than lose any more, I'm just going to walk away from the table. This isn't something that I can tell you why you do or what you do. The question for you to ask yourself is, why can't you leave the table? If you're in a play and it's dropping, and you put too much of your portfolio in it, what's stopping you from just taking a minor loss compared to, say, the next day it drops 50%? It would feel really good, right? It'd be such a relief. If you knew in that moment you took your losses, you know what, shit, I lost 5%. Then the next day you see it tank 50%. How relieved would you feel, right? That's dopamine. This is all about dopamine. And what's quite interesting is this experiment that was done with gorillas, okay? And I won't go too far off base here, but it was one of the most interesting ones I ever read about. This gorilla was in this cage, and they gave him a button to press for food. And every time he pressed the button, he'd get the food, right? And they measured his dopamine, and it was normal. You know, call it 50 units every time. So his dopamine, every time he hits that button, he gets 50 units of dopamine. They measured it in his brain, and it stayed consistent. Until one day, the doctor goes and he switches up the process. And instead of giving him the food every time he hits the button, he switched it to a 50% probability. So half the time the gorilla presses the button, he'll get the food. The second they did that, and they measured the gorilla's dopamine, it shot up 3 times its normal amount. Because he introduced the idea of chance or risk. That he may get a treat, he may not. And that's what this is. And that's what the market does, is it plays on the fact that a lot of us are undisciplined, and we lack the basic knowledge and fundamental discipline to do this effectively. Which is why we just don't shut up about trading education, because these alerts are no good to you if you don't learn the basics. And if you don't make an effort to employ discipline. You will just continue to lose. Because they're not going to always be right. Investing from March until June was simple and it was easy. And anyone could have probably done it to a degree. I still know people that lost money, but it was easier than it will be. We are getting back to the way the market has been for the last couple. It's been on a pretty decent bull run, but it's going to be choppy here. The market doesn't have a direction at this moment, in my opinion. It's still going up, yes, but I feel uncertainty and I feel some sort of uneasiness about it. And if you struggled then, it's going to be way worse now. Which is why we want to help you. We don't want anyone to be dependent on the alerts. We don't want anyone to be dependent on us. We want you to have the proper information and discipline so that the alerts make you easy money. Because there are a few traders in here that I've talked to extensively that have been trading for years. They probably know a lot more than I do. You know what they told me? That they're up way more than they ever have been, because basically what we're doing is we're cutting out all the research process for them, and we're just giving them opportunity after opportunity after opportunity. They take the ones they like, they don't take the ones that they don't like. And what's more, they cut their losses on the ones that don't play, and they lock in their gains on the ones that do. If we're never taking profit, there's one member, and he's not here anymore, so I'll absolutely mention him, but Mr. Crosby. I had a lot of hope for Crosby. He got with me on the iBio train. We got it at like $1.40 and then $1.60. And it ran to damn near $7 or something like that. We were up over 350% on that play. And I told him, dude, take profit. It's 350%. Go talk to an advisor and ask them when's the last time they had 350% gains sitting in front of them. In front of one of their clients on their portfolio. You're not. Because they don't. And granted, they take less risk. But realize what kind of gain that is. And then think about the fact that he had hundreds and hundreds of dollars in profit on the table and didn't take it. And it came all the way back down to $1.70. 10 cents above where we bought it. So can you imagine that? because I kept a small amount of it in my portfolio. It's retirement. I just set it and forget it. I'm not going to touch it again. And even on that small amount I kept, I kind of wish I would have locked in profits because it came damn near to my entry. And on top of that, I had like $2,000 on the table from that small portion I had left. I took about 80% of what I had. I took profit on at 300% plus. So I can live with that. But imagine watching that in front of you and then disappear. What is the logic behind not locking that in? We know that these pennies trade like this. We know that they're manipulated. If we know all this, then where's the acceptance? Which is just saying that I acknowledge that this is happening, my decisions are my own, and what is there left for me to do? And if we don't do these things, no one here is going to be successful, and that's not what I want. That's not in my, let's call it my selfish interest. You doing poorly here is not in my best interest either. You doing well is. Me doing well is. Me doing poorly is not in my best interest here, and probably not yours either. If you're following my plays, if I'm doing terrible, then you probably are too. But lucky for me and for Lee, both of us haven't been done this for quite a while. Like we've done pretty well before, during, and will after coronavirus. But if the discipline isn't there, if the willingness to just take a small loss isn't there, then you probably won't be very good at this. And you probably won't see the kind of gains you were hoping for. But one thing I can tell you is that if you can focus on not losing, which means if you can focus on managing your risk, you will win. You will absolutely win. In my opinion, the few members that I've seen that, there's a few members I talk to consistently, they lock in, 5 to 10% profits all day, every day. That's what they do. They don't care if it ran 500%. They lock them in, they move on. Some of those members are up even more than I am right now. They're up, one of them was up 235%. He's been here since the end of April. And he's up 235% total. He's up like 28% this month. I've had a rough month. I know a lot of you have too. Even I am having a rough month. But he's up 30-some% or 28%. Why? Because he was better. He had more discipline than I have this month. That's insane to me when I think about how I've even lacked it. Because we're all human and it is what it is. But my point is that if you take small, consistent gains, being in this community will be one of the most profitable decisions you have made. Because I've seen the members that do that, and I've seen their portfolios and what they look like. And it's even made me reconsider taking profits a little bit sooner than I usually do as well. And they take profits on the whole thing. I start taking profits right away. I just don't take profits on my whole position. Because at the same time, sometimes I'm still chasing those crazy gains too. And we're human, and it's okay. And the goal is that we give ourselves permission to do that when we do. Because guess what? It already happened. So if we beat the shit out of ourselves because we held on to something and didn't take profit, it doesn't help us. It doesn't help anyone in the community. And most importantly, it does not help your portfolio. The purpose of all this is just to understand that the goal here is forgiveness when we do make mistakes. And the honesty that is required to learn what we need to learn to not do them again. If you can do that, you will do this successfully. Because when you do those two things, it sets a whole perspective in motion, right? Where you're willing to take a small loss. Where you're not, bitching and moaning to everyone, which complaining, there's nothing wrong with that. But the reason we'll mute people is when they've complained, so we reach out to them and say, hey, let's get you on voice for a one-on-one. Let's see what we can do to help. And they don't want any help. And then they send us their portfolio, and there's like 6 stocks that weren't even alerted in this group they're down 50% on. They're down on some of the alerts, but total, the alerts are net positive, so they're at a positive gain. Like this one guy in particular I'm thinking of. So he's down from plays that had nothing to do with this group, and he's saying that the alerts are trash because what he's hoping for is that these alerts will be so good they'll dig him out of the massive hole he dug for himself. Which I'm sure they can, but again, if you lack the discipline to employ them the right way and cut your losses when they're there and take your profits when they're there, you won't be good at it no matter, fucking Jim Cramer's giving you alerts. You're still not going to be able to do it profitably. And what we want is for everyone to succeed and thrive here, because the more money you make, the better off we all are, the more this can grow. And to be honest with you, I think the more we'll all succeed. Because when you think about it, if we can change the atmosphere here to where everyone is helping their neighbor, right? So we're all in this together. Just imagine that. If a new member didn't know about the buy-in method, right, and they're brand new, and you're not an admin, you're not a mod, you're just a regular member, but you end up educating them on that buy-in method, and you save them, the $1,000 they were about to lose by buying in all at once. How did that not benefit you and them and the community? It always will. And I've seen a lot of it, and I just hope that it continues that way, because it makes me very happy, it makes me very proud, and I think it helps us all on the whole to succeed at doing this, because that's all any of us really want. Like, we don't come here to intentionally lose money. We come here to make it. And the question is, what do we need to do that? And if you haven't seen those results, if you're brand new like 2 days and you took one play, like, that's different. But if you've been here a month and you're still not seeing it, then reach out to one of us. Eddie sat there on one-on-ones with so many people. So has John. So have I. But when you're unwilling to accept help and you just want to blame, and then we come to find out that you really need to just blame yourself because that play wasn't even from here, yeah, we're going to mute you. That's what's going to happen. I'll tell you that. I'll be forthcoming about that. If your goal is just to bitch and moan and you're not even willing to even talk about it or accept help or even explore what could be happening, then yes, absolutely. Because at that point, that member is now a detriment to you guys as well, which is what I don't want. That kind of toxicity is contagious. It's like a virus. And it will slowly bleed and infect all of us until we're all miserable. And nobody wants that. But if the help is being offered, take it. If you don't know how to accept help when it's given to you, then you're not going to thrive very much in life, period. That's the point of us all being here, is to help each other. And so when we're in plays like this, and we're struggling to just accept that we don't know where the bottom is, or we put in 100% all at once and we don't set a stop, and we're not willing to learn about what's wrong here, then this probably isn't for you. It could be, but until that attitude and perspective changes, it won't be. So a member was asking me about one play, hey, drop 10 cents, should I add more? I was like, dude, I'm in like 5-10%. I'm not adding more until I know where the bottom is. And then I told him, he asked me again, hey, it's down another 10%. I'm going to add more in. And I said, why? And that's where that phrase, don't try to catch a falling knife, comes in. Because 9 times out of 10, you'll get cut. This is trying to catch the knife. Is adding when we don't know where the bottom is. At the same time, it's also burning your money. Why would you add when the play is still dropping? Why wouldn't you just wait until you know it's stopped? So every time you think about throwing money in just because you see a play is down, don't. Think about it. Ask. Go to Webull. I'll show you something very useful. Turn on this thing called Pivot Point. It shows you support, resistance, and these pivot points, right? The important thing to do is I wouldn't use any other time frame than 1 hour or 1 day. Preferably 1 day, because this will give you these will be accurate at 1 day. See, bounce here off this support, or previous resistance becomes support. Resistance, rejected, beat it, bounced off pivot, struggled at resistance, moved up. Use this. It's free. It's available to everyone. If you don't have Webull and you want to sign up, you'll also get a discount on premium if you want to join it. If you use our link, and you get free stock. But it's free either way. If you see a play dropping, okay, let's do 1 hour, see if we can find an example. So say we alerted this Chipotle play, okay? And it's wow, here's resistance right here. We think it's going to break up. It's going to break this resistance. which means it could go up all the way almost to 1300. So we add in 5%, but then it drops the next day. Instead of you just jumping in and adding, you could have gone to this chart, looked at this, and said, hey, the support's all the way down here. Why would I add right here? I don't know if this support is going to hold. Why wouldn't I just wait and see? And as you can see here, smart money did wait. And they actually waited until they got an opportunity below the support to add. Now their entry is safe. And then boom, from there, it's just a ride up. So that's the question to ask, is go look at this chart, look at the daily and look at the 1 hour. If our first alert's right here because we think it's going to explode, just wait. Because you would have had an opportunity to add here. You know, okay, here's our resistance, so past resistance becomes future support. Okay, bounce off support. It was rejected here. The line just touches and the price got moved back up. This would have been a great adding point. This would not. These are tools that you can use. We can't sit there and walk you through every single piece of this. We just don't have the time. I wish I could. But these are simple tools that if you can take responsibility for yourself and look at them, you can do this. You don't need a ton of trading knowledge to see, okay, this is the line, this is where the price is, this is support. S is for support, R for resistance. So when it's dropping, this could have been the support. We wait and we add here. These are just the little things that can help you. And I hope that everyone here does take advantage of them, because we don't want to see anybody lose here, especially when you don't have to, when there are other ways. But yeah, I don't know if Lee has anything else. Yeah. Yeah. And that's the thing, is that we can't decide, again, that amount of risk that you have, we can't decide it. So why not take a small loss and move on? Yeah, and when you think about it too, what? Why are you trying to tell me what? We don't. And the thing is too, is like, when you talk to an advisor and you ask him, like, so my sister's boyfriend, he's a financial advisor, right? And he was like telling me, in a good scenario, he could, generate 10%, 15% max for a client, right? And we're talking about taking, like, say you take a 1% or 2% a week. Do you understand what those compounding gains are? The more gains that you secure, so you lock the profit in, you take that 5% gain, you have now 5% more money to work with, which means you can take a bigger position, which means when you take 5% on the next play, it'll be compounded because you already have more money to play with. And that's the goal here. I'm sure you've seen it sometimes on like huge buys and stuff like that. Like a 10-cent move with $1,000,000 is massive. Versus if you have $100, it doesn't seem like much. But that's the point here, is that we need to get up for those compounding gains. And if we can lock those in, then we're going to do well. We're going to succeed and we're going to thrive here. Everyone will. And that's the goal, once again. But to a degree. Yeah. And at the end of the day, the goal is to educate. So no matter what, focus on not losing, because then you will absolutely see gains. Small losses do not matter if there's gains coming following them immediately. All that matters is that there's more gains than there's more than losses at the end of the day. Yeah. Yeah. That's the goal. So that's the lesson we want to take from this, is that set them, move on to the next play, and honestly, if you don't, just the most members I talk to, and again, this isn't everyone, yours may be different, maybe you saw gains right away, maybe you've been here 2 months and you haven't seen any, it's different for everyone, but most of the people, and I have to go with the law of averages, so the most people I talk to, they'll struggle the first couple weeks, and once we give them a couple pointers to go by, and Eddie will attest to this because he's doing a lot of the one-on-ones, once they're 2 months in, they're sitting in a fat positive. Like I remember one member the other day, he just took a couple simple strategies. He told me I'm just locking in like minimum 5% every time, maximum 10%. That's my range, and I take it and I leave. He was down like 12, 13% total. Now he's up, I don't know, shit. He was up over 50 the other day. He's only been here a month, and August hasn't been that good. So if he's able to do that in the last 30 days, then just imagine once the market gets some direction and we know where to play, it'd be even better. But if you think that you're going to be able to walk in and do this in 2 weeks, you're kidding yourself. But if you want to actually do this, like you really want to do this, like you want the passive income, you want to be able to manage your own money, wealth, what have you, give yourself 60 days, 90 days, take the whole trading course, man. Go through all of it. At the very least, you'll at least walk away knowing something. You'll go away knowing how to, maybe at least a little more of how to trade. And then say after that, you're able to find out, okay, this is what was working, this is what didn't work, and you manage some stuff on your own, you end up doing well. Or say finally the alerts start working for you because you're implementing the methods that we gave to use them. So, I don't know. I think that's about it. I just really wanted to go. The stop loss thing was big for me. I just feel like it's not talked about enough, and I just wanted to make sure it was, and that everybody heard my thoughts on it at the very least, and Lee's thoughts on it, and whoever the hell else was talking. I don't know, whatever version of Edward that was, but that's pretty much it. So let's go into the week managing risk well until we have a good idea of the direction, and then guess what we're going to do then? We're going to continue to manage risk well. And if we can all do that, then everyone here will be in a good position to build their fucking wealth, man, so you can do well at this. So that maybe, like I was saying last night, you have a second job, you can quit it. Or maybe you can like afford to go out to eat a little more, like just enjoy these parts of life that maybe you weren't able to enjoy. Because I've been in that boat, man. I've lived in my car at a certain point. It sucks. But the goal here is to exercise that discipline to succeed at this. And that discipline will carry over in everyday life because all trading is an examination of who we are at the core. If I'm impulsively jumping in plays and I'm unable to manage risk and I'm unwilling to ask for help, then odds are I do that in my life everywhere. It's just coming out here, and sadly here it has real life financial consequences. So think about that. And I know it's not an easy pill to swallow, but trust me, if you can find acceptance of that, you will probably do pretty fucking well at this. But yeah. Yeah, and on top of that too, what he means by your plan is how much am I willing to lose and when do I want to take gains and how many risks can I take this month? Do I have any day trades? Like that is all stuff that fits into your plan that we can't decide for you. The alert is the suggested info and is 99% of the time that's our exact plan, right? I mean, it's the plan. It's like we want it to run. We don't want plays to lose. But the point is that we have our own idea of what our risk is. You need to decide yours. If you need help doing that, ask for help. And just make sure that you're not going all in on COVID plays. You're not going all in on industrial plays. You're not going all in on retail plays. You don't want to do that. And I think a lot of people, like myself, I'm including myself in this because I also had probably way too many COVID plays. Because no one saw that Russia bullshit. First of all, it was bullshit. Number two, no one saw it coming. That turned the market upside down. And so I took a big hit just along right there with every single one of you. When you're losing on these, we are too. But we're going to start changing the strategy here because, to be honest, I need to set more stops. I would be up a lot more than I am right now had I set them in cases where I didn't. So the goal here is to really just start educating everyone on how to go about that so that we can all see more gains. Yep, exactly. But yeah, right on. But I hope everybody has a good weekend. Make sure to take some time away from this shit too. Sundays, I try to, as I wanted to do this for you guys. Small sacrifice to be made for all of us. And I'll take some time off for the next couple hours, be with the family, hang out, and then usually like Sunday nights, 9, 10, I just kind of breeze through my portfolio. I just look at some plays. I look at where they ended up on Friday if I didn't look at them. And I just try to get an idea of what I want to do with them, right? So if I'm down a little bit, do I set the stop or do I, set a limit sell because it's a play that spikes often? Like I go through and I do those things, and then I browse through the market just to kind of see how the futures are looking and what industries might play well. It's usually like an hour-long process, and it's simple, but it helps. So, but yeah, I hope everybody has a good weekend. Thanks Lee for coming out here. Thanks Eddie for being at the beach like a dick, and that's about it. But I love y'all. So please ask. You know what I'm saying? Alright. See you guys later.